Good morning, this is Meir Valensky with Driving Markets. Quick caveat, anything said in this piece is an opinion. I'm not an advisor, not an investment advisor, not a financial advisor. Any trading's done on your account, it's your money, you withdraw it, etc., etc. I've kept the warning short because some of the viewers are saying that even the warning's getting too long now. Anyhow, let's move on. So the big news yesterday has to be Tesla. I'm a massive fan of Elon Musk, and Tesla came out and completely beat analyst expectations across the board to the degree whereby its shares went up over 10%. Now, Tesla is one of the most talked about and watched stocks in the world, if not, in my opinion, the most watched stock. It is dynamic, the share's dynamic, the CEO's dynamic. There's always something coming out with a story regarding Elon Musk or with Tesla, and those bulls on Tesla who are looking to buy have done very, very well, where they bought Tesla at the lows and the shares went up yesterday by 10% and likely to go up further. Tesla is a great company and Elon Musk is a great CEO, probably in my opinion the best CEO there is globally. So Tesla being 2% makes up 2% of the S&P. Therefore, the S&P is going to be pulled around alone just by Tesla. So it's a great stock to watch. It's a great stock to get involved in because it's very, very volatile. And even if you're trading it on a day basis or on a swing basis, there's such volatility in it where it moves 300-400 points a day. There's plenty of money or plenty of range, a wide enough range broad range within there to make the money that you need on Tesla. So it is a great stock. I love it. I love Elon Musk, and there's always something exciting happening regarding the CEO of Elon Musk, whether it's with Twitter, whether it's with spaceships, or whether it's with outer space, or whether it's electric cars. So he's a great person to follow, and also it's a great stock to follow. So I do love Tesla. That also had an impact, obviously, on other suppliers and providers within that sector and pulled those up yesterday. The markets were a little bit whippy yesterday again. What we had the markets move up, then move down, eventually closed up. The Dow closed up 162 points. It's just a shade off the 32,000. 32,000 looks like a resistance level, but if it can break that up, then it's going to go up. Overall, there is other factors that need to pull this market up, and the dollar needs to weaken a little in order to pull the indices up. So those of you who are bulls and believe in buying shares and pushing the market higher, the dollar's going to have to weaken in order for short-term shares to go up. Does this change my overall opinion on where we're going longer term? No, it doesn't, because markets move around short term, and there's no reason why if markets fall off they don't bounce a little bit around. And here the bulls and the hedge funds and the investment funds are trying to push those markets higher because it could be in their interest to make the markets higher, whatever the positions they're holding. So there's a lot of money out there, a lot of liquidity, and you could have a rising market over the next few days, over the next few weeks. But overall, the trend, in my opinion, is down with rising interest rates, rising inflation, and other global economic factors. We can't ignore them. We're talking about a 1 or 2 day or a few weeks trend, and movement of markets does not change the overall trend. So take that into account. Looking at the dollar and the euro, yesterday the ECB raised rates by 50 basis points, which is 0.5%. The first raise in over 11 years, and there's more to come because Europe's inflation is out of control, but Europe's in a shocking state and it could go into recession. Therefore, the euro as a currency has to be under pressure, has to be a sell, especially against the dollar. And we were talking in a moment about 102, 103. I think it's going to float back down and test those levels of 1-on-1 and then break that below, probably go to 95 on 1, but that's not going to happen within 1 or 2 days. That's over a trend, that's over a period of time. So that's something to watch on the FX side. As regards to cryptos are concerned, Bitcoin went up to just over 24,000 and then wasn't successful in pushing any further and came off yesterday all the way back to 22,200, which was a big move, intraday move within 24 hours. They had the Bitcoin coming all the way down that pulled the sector down negatively yesterday. So the question is, can Bitcoin breach the 24,000? I don't think it can. I think Bitcoin is probably on the way down in, again, it all depends on where interest rates goes and overall views of investors, whether they want to take on risk. But it's a good trading stock and has a good trading range. Regarding bonds, bond yields have gone up. What happened was the investors sell the bonds and they go into higher risk investments, so yields are up again. The 2-year yield again is higher than the 10-year yield, and that's an indicator of a recession. It is on the horizon, you can't ignore it, but temporarily the markets want to go higher. Meir Velensky, Driving Markets. Have a good day.